welcome to the Champion School of Real Estate Quarterly Update. I am so happy to be able to welcome all of our wonderful Champion students from all over the state of Texas, if not elsewhere, to our monthly and quarterly update. Today is truly one of our most look forward to interviews when we have Dr. Jim Gaines with the Real Estate Center at Texas A&M University. And welcome, Dr. Jim Gaines.
Thank you. Fun to be here.
We love it. I was telling Dr. Gaines that in our CE classes, we always show the quarterly taped interview because it gives all of our students the opportunity to stay up to date with what's happening in real estate across the state of Texas. And Dr. Gaines is the chief economist at the Real Estate Center. You may not know, the Real Estate Center has been in business for like 45 years.
47 years.
47
Just to be technically
years.
correct.
I was
yes.
close. And not only do they keep up to date with real estate sales, but also development, commercial, trends, land use. And I know that myself and my instructors rely on the recon because we get that every week, is it?
Yes, sir. Yes, ma'am.
It just comes across so regularly, and I assumed it was weekly, but there are great pieces of information in that. So we have a lot of good stuff for you today, but first I do want to say hello to all of our campuses around the state: North Dallas, Fort Worth, Austin, San Antonio, Houston West, Houston North, the Galleria, and our online people are probably watching, and as well, everyone, as well as our live broadcast, students and customers can see this on YouTube this afternoon. So if you want to tell your agents and friends who missed it today to look at YouTube this afternoon, we will have it good to go. There are a couple of announcements that I want to make you aware of, and that is next month is our Superstar interview. We have Amy Bernstein with Bernstein Realty and Ronnie Matthews with RE/MAX Legends, both legends certainly in the real estate brokerage business, both broker owners, and I'll be interviewing them on October the 16th. And on September 9/11, we have Logan Stout with Pat Combs, and they will be talking about the grit factor for 90 minutes. 90 minutes of good coaching and training and only $35. Go to championschool.com to register for the Logan Stout, Pat Combs grit factor, and as well for the Superstar in October panel with Ronnie Matthews and Amy Bernstein. And of course, both of these and today's wonderful interview with Dr. Gaines is great for real estate, loan, inspector, appraisal, anyone within the industry that wants to keep current and be credible. And I believe that's all of us that want to be credible and current.
Sure.
So let's get going. First of all, mentioning the recon that I personally love and read consistently. There are so many firsts for Texas that we're not even aware of unless we read information like
Right.
that. And there were a couple of things that caught my attention, Dr. Gaines. One being that Texas is the top wind producing state.
Right.
And Henry and I, my husband and I, we've driven across California, and I just sort of assumed that California was like the top wind producing, and I was so proud and happy to know it's Texas. So how do we capture the wind, and what is the benefit for all of us in Texas?
Well, everybody knows that the movement in the energy field, and in fact, we'll talk a little bit more about this maybe later on in the program here. Alternative energy, renewable energy, wind, solar, and so forth. Texas got an early jump on it. West Texas, and particularly Middle and West Texas, are particularly located for wind flow and so forth. There has to be volume of wind and speed and direction and all that. Anyway, you can go out, like you were saying in California, but you go out in West Texas, you'll see a lot of the same kind of towers with the windmills and so forth along the coast. We're producing about 15%, just shy of 15% of our energy is wind. Right now, the only limiting factor is the grid system.
What does that mean?
Well, the power lines, the transmission lines, to get the energy, the electricity from where it's being produced by the wind towers to where it's needed. So all of this is out in West Texas, but all the population is in East Texas.
Okay.
So how do I get the power, the energy, the electricity from there to here? And that's the only limiting factor. So we'll see that increase over time. We're also seeing similarly solar panels, solar farms, solar development on houses.
Where are solar farms?
We're seeing they're in the same kind of areas, West Texas, some South Texas. The Austin area has had several solar farms, and in fact now have builders are looking at including solar panels more and more and more on homes, new homes, and so forth. And it's there's tax advantages to it. You can get a tax credit. There are a number of things there. So again, the alternative energy as opposed to having to have coal or natural gas fired generators.
Now we're also #1 in mining and logging. Talk about that for a minute.
I think what you're referring to is we're #1 in creating jobs in what's called the mining and logging industries. And that first of all, to explain to everybody, the Bureau of Labor Statistics defines it. There's a national code for industries depending on what the company does. And mining and logging is just a generic term that's used for those companies that are related to or actively engaged in mining and logging. Well, mining and logging in Texas, of course, the logging is the logging in East Texas with lumber, which has actually not been growing. That's been declining.
That's what you said. It's been declining in the
But the mining is real obvious. It's the oil and gas. The oil and gas energy industry, and it's all the companies that get coded that way. So some of these companies are not directly drilling holes in the ground, drilling wells, but they're service companies, or they're the trucking companies, or they're providing other services. All of the secondary companies that work in the general area of supporting the mining and the oil and gas extraction are classified that way. So when they're adding jobs or losing jobs when it goes the other way, it's in that mining and logging class. In fact, I'm going to show you a little later what those numbers look like for Texas at least. It's tremendous.
It's exciting. And then I read this unbelievably difficult word that I want to ask you about, but I'm so interested in it because it's adding over $2 billion to the Channelview-Pasadena area, and it's the propylene oxide tertiary butyl alcohol.
I'm glad you said that, not me.
And how amazing for the Channelview-Pasadena area that over $2.4 billion.
$2.4 billion for that particular facility. It's just that facility. In the past several years, most of the people here in the Houston area will know that on the southeast side of Houston, we've had over almost $60 billion worth of new facility development. All of this, and what you're referring to is what's called the downstream energy industry. It's the petrochemicals. It's the using the oil and when you drill an oil well, you get actually three things out of an oil well. You get crude oil, you get natural gas, and you get what are called the distillates or liquids. And the ethylenes and the propylenes, and I'm not the technical expert in all this, but you get these things. They're used in the plastics industries and the chemical processing industries and for various uses, and that's what you're referring to. That's a plant that will use these liquids that come out and develop them for making other products.
Well, I mentioned all of these number ones that we've ranked.
Right.
Because certainly as real estate agents and on the affiliate side, appraisers, inspectors,
Right.
every area that affects us, certainly with Champion School of Real Estate and the people we put through, it means more people, more homes, more jobs.
Exactly. That's the bottom line for the effect here for the real estate.
Exactly.
And it's more commercial development. It's with more people, more everything. Office space, more in manufacturing space, more warehouse space, obviously homes for people to live in. So there's this cumulative effect. And incidentally, that's why we pay so much attention here in Texas to the energy industry. Broad, and that's a broad classification of energy industry and everything involved with it, because it does have all of these impacts, and that's the economic multiplier effect. It's not just that direct 2.4 billion.
No,
it'll be more than that when it gets factored in.
Exactly. And for our agents, the wonderful part of this discussion that helps us in our business, buyers, sellers are always asking our agents, is it a good time to sell? Is it a good time to buy? Do you think the economy is slowing down? Do you think the economy's, speeding up?
Right.
And with this information showing all of these new jobs coming into Texas, all of these industries that are top in the U.S., most definitely as an agent, it allows you, and by the way, you're going to give them a big surprise. They can get these slides that you're going to be showing in just a few minutes.
Yes, ma'am.
But it allows you to be the expert, and you're able to say, well, I'm not a Dr. Jim Gaines, but I can tell you that all of these jobs are coming into Texas, and that's why our housing is so dynamite.
And incidentally, I'll be mentioning it here more later. We're talking about the energy and so forth. Well, we all know that relates a lot to Houston and to other markets like Midland, Odessa,
Sure.
Victoria, Corpus Christi, and so on. Similar fashion, the high-tech jobs that have moved to Austin in the last 15 years have made Austin absolutely explode in terms of housing and economics and income levels. Dallas-Fort Worth is getting corporate headquarters that have moved in the last 5 years. Regional and national headquarters of Fortune 500 companies, building plants, building their own campuses, and bringing people in and employing local people. So it's the nice thing about the state of Texas is we're not really tied to the one thing. Energy is a big thing, and it does play a very big role. But there's a lot of other areas as well, as we'll see.
And we're not tied to one city. I was looking at Corpus Christi. I had no idea that their port was as huge as it is.
Absolutely, and in fact, there's an LNG plant that's a liquid natural gas plant for exporting, which now most people, I guess, we're now aware of it. The United States has, in the last 25 years, reversed itself from being an importer of oil and gas to now we are exporting because we produce so much of it. Incidentally, if Texas were, or when we become an independent country,
I thought you were going there.
Yeah, Texas would be the number 6 producer of oil and gas in the world.
In the world, wow.
Just the state of Texas.
Well, I want to see the charts, the graphs, and all the other good information that you brought us on all of the metros.
Let's see what we can do with it. And
I know you have so many good pieces of information that is totally current. And as I mentioned earlier, these slides will be available after our interview today. And all you need to do is email Joseph, Joseph, at champions with an S, championschool.com. And Joseph will email over to you the slides. If you forget the name Joseph, then just email me, Rita, at championschool.com, because we want you to have these at your fingertips. Again, great information. Okay, Dr.
Sure.
Gaines.
Well, let's see. I unashamedly, I'm gonna. I think I'm gonna.
Yeah.
I was going to give you a real quick commercial to tell you about the Real Estate Center we mentioned earlier. We're over at Texas A&M. And one of the things I wanted to point out to your audience, to the students here, all of the information, or a great deal of it, is what I'm going to show you today, you have access to and have ongoing access as you go out in your career. Go to recenter.tamu.edu. This is a screen capture of the latest capture of our website. It changes regularly. But what I wanted to point out, at the very top in the red circle, you see research data, news. Hover over those, it'll have drop lists. You can go find things. The recon, incidentally, that Rita was just mentioning, the price is right. It's free.
It's free.
All you have to do is just give us your email address. It comes email, so you read it when you're ready to, and you get the information. We also put out regularly the reports on the outlook of the Texas economy, the Texas housing market, the monthly review of the economy, the Texas land market, and then the main one up there, the Texas border. We do treat the border regions from El Paso down to Brownsville. That's a whole different world, a whole different market. It's very different than, say, the Dallas-Fort Worth or the Austin markets. So we look at those differently, and we're doing those kinds of things. We also have for any of the major metropolitan areas in the state, you see the map there, you can click on any one of those little pinpoints. I picked on Dallas-Fort Worth and did the screen capture. This is only this is about the top 1/3 of the total page. And I'm not sure if the pointer, but over there down on the bottom on the right where it says market overview, and it has the arrow to the point right, all of those entries right there are links to other websites that give you the specific data that you're looking for. And you can get demographics, education, employment, housing, industrial, and it goes on for several other categories of pieces of information that you can get. Well, let me get to the hard part. That was the commercial, but I do think it's important for people in the industry to know where to go find the information,
it's a great tool.
Where to get the data. You don't have to rely on just hearing me or anything else. You can go do it for yourself and think about it and research it. Here's what's going on nationally, and I'm trying to simplify this a little bit. GDP growth is probably going to be somewhere between 2.5% and 3% this year. If you're not aware of it, since the 2007-8 recession, and incidentally, most people, I lost track of it. It's 11 years, almost 11 years ago, since December of 2007, that recession officially started. It ended in June of 2009, so we're coming up on nearly 10 years later. It's a record expansion. The stock market has been in expansion mode. It's the longest running bull market that we've had. Anyway, GDP expansion. Interest rates are rising, maybe. I said last year that the only thing I would forecast about interest rates is that they would change, and I was wrong. Because basically during the course of the year, they didn't change much. They didn't change much. The 10-year Treasury is currently running around 3%. The 30-year fixed mortgage rate for housing is running around the 4.5%. Now, I know that can vary by area to area. You can actually still get a 4% loan, maybe even a little better than 4% if you do 15 years and 20% down. I mean, there's some variation there, but we're looking at that. Debt is here's the only real cloud on the horizon right now, and it's a biggie. Debt is expanding. Total U.S. debt, everything, I add it all up together, it's about $66 trillion. That's 3 times more than 1 year's GDP. 1 year GDP is just right at $20 trillion, and that's a lot. Inflation is going to run about 2.5% this year, which is where the Fed has been trying to do it. The tax cuts that we got last year, economically, the economic impact of those tax cuts so far has been mixed. The expectations were that people would have more disposable income because their rates were lower. Corporations, lowering the corporate rate, corporations would have more earnings to invest back. So far, it hasn't happened to the extent that they were hoping for. But that's not really surprising because it takes a year. There's a lag in there. It won't be till this time next year you fill your tax return. You'll really feel it. We'll see it. Industrial production, we're producing a lot of stuff. The problem with industrial production right now is, of course, We're producing more and more and more things, but with fewer and fewer and fewer people. So the industrial section is just not hiring. Income is growing, spending not as much. That's back up to them. Most people are not aware, and as real estate students here, you need to know the national housing market has not fully recovered from the 07-08 recession. It hadn't
We
made
have
it.
just felt it so strong in Texas.
We felt it so strong here in Texas, and we can make the argument that maybe we have probably collectively recovered. But housing construction, which as economists, that's the thing we focus on the most, new construction, has not recovered. We're running about 85% of pre-recession levels. And incidentally, if you're reading the real estate press here in the last 2 weeks or 3 weeks or last month, you'll discover that at the national level, the housing market seems to be stalling a little bit, slowing down. There's a couple of reasons for that, I think. And the good news is it's stalling really because there isn't enough inventory and turnover. We don't have enough houses available for sale.
The inventory is so small.
Is a real problem, and I'm going to refer to that or relate it to you for the Texas experience here in just a little bit. Jobs are going up about 1.5, 1.6, 1.7. We're putting it in that collective group that we expected for the year to between 0.5 to 2%. Unemployment is going to be around 4, actually running a little less. And incidentally, very important, first time in history, at the end of the first quarter of this year, in March of this year, the estimated net worth, that's net worth, that's assets minus liabilities. That's your house minus the mortgage. It's your equity. It's the net worth of all your assets minus all your, topped $100 trillion for all the households in the United States. That was a remarkable feature.
Increase.
Let me talk about interest rates a little bit. I know I'm going fast for you because I got about 400 slides and we only have about 30 minutes.
He's joking, not 400.
I'm kidding. I'm kidding. Here's the interest rates. The green line on the bottom is the federal funds rate. That's the rate that you read about in the newspaper all the time when the Federal Reserve Board gets together and they're going to target a rate. That's the rate that's being referred to. It's technically the overnight bank lending rate. And incidentally, they're meeting again, I believe it's September the 25th through the 27th, so a little later this month. And we are expecting, the consensus of opinion is, that they'll raise the rates again another 25 basis points. And maybe do it again, or probably, I should say probably will do it again in December. So between now and the end of the year, we're expecting that green line to bounce up to about the 2.5 level, which is the upper limit of their range. They do a target range, and all I'm showing you here is the upper limit of that range.
So it's a 2.0 right now. So
it's a 2 now, and if they go up a half a point, it'll go up to 2.5. The blue line in the middle is the 10-year Treasury. That's a benchmark interest rate that's used around the world and in the economy to kind of measure what interest rates are doing generally. The black line is the 30-year fixed mortgage rate from Freddie Mac. So that gives us an idea. And it's interesting, you can see that while those rates have gone up a little bit, they haven't really been going up at the same pace, at the same rate. Generally, it's about 1.6 to 1.7 add on to the 10-year Treasury gives you that 30-year fixed mortgage rate. So for those of you who want to do it. Here's what I've been looking at. This I gave you actually in January, and all I'm doing is updating the slide to show you where we are. We expected the home mortgage rate to go up somewhere between 25 to 100 basis points. A basis point is 0.1%. 100 basis points is 1 percentage point. So if it goes from 4 to 5, that's a 100 basis point increase. We started the year in January of this year right at 4%. It was actually about 3.89 or 3.9, but it was right at 4. We thought it could go as high as 5 by the end of the year. Even if the Fed does these next 2 bumps, it wouldn't hit 5 until later in the year. And right now, there's not a whole lot of evidence that it's going to go that close to 5. We'll have to see how that goes, but that's what it looks like. You can see the post-election spike. That increase started on November 10th, 2016. That was the day after the election. Interest rates all spiked around the world. But I would also point out to people, we're still running at a 30-year fixed mortgage rate for buying a house under 5% or around the 4.5% mark. We had a housing boom, unprecedented boom from January of 03 to January of 07. Unprecedented.
It's huge.
And during that period of time, that mortgage rate averaged 6%.
Was it?
Yep.
Oh my goodness.
If you go back and look at it, so we don't have to have 4 or even 5% mortgage interest rates to have a housing boom. It's just helpful.
It's just the perception.
Perception
That goes up.
All right, let me. That was the national level. The Texas economy, 2015-16 was down years for Texas, for a good bit of Texas. Let me modify that a little bit. Everybody slowed down a little bit, even Austin and Dallas. And I always like to joke and say that, you know, J.R. Ewing notwithstanding, Dallas is not an oil and gas town. It's funny because the rest of the world thinks it is because of the TV show.
Because of Dallas.
But when they had the price of oil decline starting in late 14 and went through the year of 15, and 16 wound up being a down year because the oil and gas decline. Dallas really never felt that much, the Metroplex area. Austin, for the most part, didn't feel it that much either. Now, the Gulf Coast area felt it, obviously Midland, Odessa, and so on. 2017, though, it all bounced right back. It was a good year. 2018 is running even better than 2017. And I'm going to tell you right now, our outlook for 2019, and as I was telling you before we got started, our forecast now, attention, has now moved out into the 2019 time period. We're seeing, well, there's some possible headwinds out there, trade issues and things like that. But now we have an agreement with Mexico, assuming that gets ratified. We think 2019 is going to wind up being better than 2018. And that's in the real estate market, incidentally. Not only the economy, but the real estate market.
Good. Excellent. We love that.
Thought you'd like to hear that
there
part.
might be some standing ovations right now behind the screen.
We're looking for employment to go up about 3%. Energy and manufacturing. I labeled it as energy instead of mining and logging.
Okay.
See, I got away from that terminology.
It is energy.
It's a little misleading, and people do get confused.
We see mining, and it's like,
I get that question all the time.
Just oil and gas, or what else are we mining?
Well, that's that. We do actually mine other things.
Okay.
We actually have
not to that extent.
Uranium. We have several other things. The big mining right now out in West Texas is sand for the fracking. The price of land out in far West Texas went from about $1,000 an acre to $10,000 an acre if you have fracking sand, and it's now being strip mined. So the mining is more than oil and gas, but that's the major one. GDP, we're looking for a rebound or an increase from 3.6, but this is the state's GDP, Texas GDP, going up to about 4.1 this year. Some of that is being influenced by the recovery from Harvey up and down the coast. All of the expenditures going on, that's going slower, incidentally, than people would like. Not surprising if you look at what happened after Katrina over in Louisiana.
Took a long time.
Nobody expected it to happen overnight, and sure enough, it isn't. The downturn in the energy sector that we experienced in 2016 is completely over. Oil prices are running $60 to $70 a barrel. We think the industry has sort of right-sized in the sense that 6-7 years ago, we were monitoring over 280 companies that were doing fracking out in the Permian or down in the Eagle Ford. Today, that number is down less than 60. And so the industry has sort of right-sized. It's gone through its Darwinian effort of the companies that are going to make it are now operating it, and they've become tremendously more efficient and effective at what they're doing, and the others have either been bought and sold or gone by the wayside. So that's happening. Population is going to continue to expand. We do think that's going to slow down a little bit. For one thing, we're not getting as many people moving here from some of the other states because the other states are beginning to pick up. And their economies are finally recovering. Better. And so they're not necessarily having to come here to Texas to find a job. So that pace of growth is going to slow down, but it's still going to be significant. Local growth issues, and for those of you in the real estate business and in the housing at the local level, this is going to be very important. Pay close attention to what is going on in your local communities on terms of regulations, funding, tax rates, political movements, because a lot of this, the strain that's going on at the local level and at the state level is causing a lot of cost impacts on delivering public goods and services. And then on the housing market, the cost of developing a lot to build a new home on has risen in Texas from almost de minimis to now very, very significant. And if you've got to pay, if a developer has to pay $10,000, $20,000, $30,000 in regulatory cost to develop a lot on top of the cost of the land and the actual cost of developing, well, all of a sudden you got a $60,000, $70,000, $80,000 lot. Well, you can't build a $200,000 house.
And now we have the detention ponds everywhere.
Well, you have all of that. I mean, if you're developing a couple of hundred acres, you may have to dedicate up to 10 or 15% of the total land area to revenue producing. You still have to pay for that land,
you do.
And for the detention and all of the development. So all of these things are local growth issues, and more, the city, the county, down to the HOA level, people are getting involved and wanting to. I put it real simple. Any regulation, even as well intended, even a very good regulation, is going to add to the cost. So just be aware of it and be judicious. Exporting is going on. Texas, if you're not aware of it, Texas is the #1 exporting state in the United States. We're #1. Another number one. We export in dollar value more than any other state, including California. And that's the reason why the agreement with Mexico and the NAFTA and all of the trade agreements are important for Texas and our economy. We've been watching that very closely. We think that the new deal with Mexico is going to work very nicely. It's basically just an upgrade of what was originally done in NAFTA for current conditions. There's a lot of politics in it in terms of local content requirement, minimum cost of labor, and so forth. But it looks like we're going to do that. And then the rebound from Harvey is going to continue, and we mentioned that a minute ago. But it is still having impact on property values, particularly here along the coast, all the way from Corpus Christi up to Beaumont. Beaumont was hit the hardest in terms of its housing market of all the communities. And we're still seeing impact on property values, but those impacts are kind of selective and spotty. They're down to the neighborhood level, even almost down to the individual property.
Well, we're hearing that word stigmatized properties more so than we ever have heard in the past.
Exactly. And I'm sure as agents here, especially in the Corpus or the Houston area, the Beaumont area, one of the first things a buyer is going to ask you about a property is, did it flood?
Exactly.
Did it have any flood damage at all or not? And I've been asking the agents when I go out and give speeches, I said, okay, tell me what you're hearing. That's the first thing they're asked. And I said, well, okay, if the house didn't flood, are they paying a premium for that? Or if it did flood, are they offering a lower price?
What are you hearing?
And the answer has generally been, it's a matter of interest. It's more marketing. If it did flood, and especially if it was anything significant, they simply don't want to even look at it. And if it didn't flood, then they'll go look at it, but they're not necessarily paying the premium for it. It's just what they're going to be interested in the first place.
If I have a choice, I'll take the one.
I'll take the one that didn't flood over the one that did. Now, again, here's the local growth issues. As those of you in Houston know, the city has now put in a new ordinance or regulation on new development being over 2 feet over the 500-year floodplain, which is going to affect the cost because all of that's going to add to the cost. And as a lot of you will know also, some of the houses here in Houston are being elevated. They're literally taking houses that are on slab and lifting them up and putting them on a pier and beam. And that runs, according to our data, $70 to $80 a square foot. So it gets expensive.
It does.
It gets expensive.
More expensive.
If you build it that way in the first place, it'll probably add 10 to 20 grand to the cost, because it's just simply more expensive to do that than for
But it
slab
really
upgrade.
appears as though that's the only option.
It is. It's like, think of the coast, down on the coast. We've had hurricanes hit before, and every time what they do is, if you're going to rebuild on the coast, the coastal house, it's up on stilts. I mean, just drive around. They're all up on, and what they did, it's been over the years raised from 9 feet to 10 feet to 11 feet to 13 feet.
Wow.
And every time we have a hurricane, it goes up higher.
It
goes up higher. Yeah. If you track the history.
Here's
the oil and gas industry. I'm not going to expand on this too much. The rig count is the dark line. The price of oil is the orange line. There's the you can see the good news is it's all coming back. It's positive. It bottomed out back in 2016. It's been growing. The rig count probably will never go back up to the high rig because of the efficiency and effectiveness. At $60, $70 a barrel from what that right size industry, we're being told that they can make money at anything about north of about $45 a barrel. So this is good news for Texas in terms of the energy. It may not create the boom, but it's going to do there. Employment growth. One of the, as economists, we always talk about rates of change, but I thought it was interesting just to look at the numbers. How many jobs got created? And Texas is number one. This is July to July. July of 17 to July of 18. We've added in the past year 377,000. These are the top 5 states, and you can see how. We all know North Carolina, and incidentally Georgia comes in down underneath there, and in Florida and California.
That is so positive. Every agent should print that out and have that to show.
Well,
or have it on their iPad.
Incidentally, figure a job can support 2.5 people, a family. Wow. That's not always true because most of the time you have dual income families, but it works out the ratio wise 2 to 2.5 people. Here's what we look like in terms of annual job growth. You can see 8, 9. We had the dip in 16. It went more or less flat, but we're looking for that 3% growth. These are changes in annual numbers. What I just showed you was just from July to July, so there's a little bit of difference. And you'll see 3% is a tremendous, but that's our growth years, 2012 to 2018, despite the downturn in 2016. Here's what it looks like around the state. I know we've got people here listening to us from all over the state. Yes. Incidentally, again, this is on our website. If you go and that's where I got this data from. I just made a pretty picture out of it. 2 things I'd point out. If you're not aware of it, Midland is just exploding. That's the one right there at the top. It's gone up. Employment's gone back up 10%. That's because of the rebound in the energy.
Now, is that the #1 metro in Texas right now?
Yeah, right now. That's the #1 metro. The other thing I draw your attention to is the line just below it. It's labeled micropolitan Texas. Yes, the list here these are all of the 25 MSAs, metropolitan statistical areas in the state. Definition of metropolitan statistical area, it's a city of 50,000 people or more, and the county or counties that it's its main area. A micropolitan area is 10 to 50,000 cities. And in Texas, we have a whole bunch of those.
A lot of those.
I have a lot of those. The good news is, look at the growth in employment in those, what we'll call the secondary cities. The 10 to 50,000 population, 6.2% is double the state rate, the 3.1, which is the green line in there, just to give you a basis point there. You can see the coastal communities are still struggling from Harvey, the Beaumont, the Corpus, Victoria, they're still having some problems there. But here again, we grew at about 3.1. You made reference to that a minute ago, versus the U.S. We're almost double the U.S. rate. Here's our projections for 2018, the green bars, compared to what happened last year in 2017. Austin and Dallas continue to be #1. El Paso is growing. That's actually a very good growth rate for El Paso. Houston is recovering, and in fact, that 1.5 probably is going to turn out to be too low. It's probably too conservative. San Antonio at about 2.8 are running close to 3%, which is the state average.
So what is going on in San Antonio? That beautiful city.
San Antonio,
this year has just popped.
It's not just this year. It's been doing this now for 4 or 5 years.
Amazing.
In fact, well, I wanted to come back. Here's that mining and logging right at the top. And the oil and gas, you can see 15% increase. That's that recovery in the oil and gas sector. And it's not only the guys out there in the field, literally drilling a hole in the ground, but it's all the ancillary services. And so oil and gas extraction, which is the more specific level there, you can see how that's up 4%. What I've got, the interesting part of this is on the far right, the salary level. These are the average annual salary by sector as computed by the Texas Workforce Commission. And what you can see is why those are important numbers is because look at the salaries compared to the average annual salary.
Really interesting.
We want jobs in those areas. We want anything. The green numbers are all the ones that are above average. The average is up there for total at 56,591. And you can see that where you really want to focus your growth are on those jobs that produce the best salaries. And so leisure and hospitality, for example, right there in the middle, that's your restaurant workers, hotel workers, and so on. So no, their salary levels don't tend to be as high. And there's all kind of breakouts on that.
Very interesting.
Let me get to some demographics. This is current estimate of population by county in 2017. I've superimposed I-35. 87% of the people in Texas live east along the I-35 corridor east of it, and that's by counties, counting it by county. And of course, we know it runs from Laredo right up to Dallas, Fort Worth.
And I've always heard Houston, Dallas, Fort Worth, Austin, San Antonio comprised 80% of our population. I've never seen the line that shows to the east of that.
Yeah. Well, the urban triangle, the I-45, I-10, I-35 urban triangle, which I've superimposed on there. And you can see the dark blue counties, Tarrant and Dallas up there, Karis over here in Houston. Bayer hadn't quite gotten there in terms of the 2 million mark. If you look at the logo,
Texaplex there.
Roughly 67. 2 out of 3 Texans live in the 5 principal MSAs: Fort Worth, Dallas, Austin, San Antonio, or Houston. Two out of 3, and almost 9 out of 10 live in what we'd call East Texas, east of I-35 corridor. You can see the yellow counties out there, which are the least populated. Incidentally, that's where a lot of those wind farms are.
I've driven past those on my way to Colorado.
Sure. Most of us
I had no idea they were that prolific.
Yes, they're all over the place, and on down. So it's just kind of interesting. Based on the census data, this has been the growth for the last 8 years, from 2010 to 2017. The red and the orange counties, the fastest growing. And then on down, and you can see those least populated counties are still not gaining. In fact, nearly 94.5 of them actually lost population during the 8 years.
That's another great chart.
Yes, so it's not true that the growth in Texas has been totally universal geographically. We do have some counties. And incidentally, if we did a similar color slide here and showed the population by the concentration of over 55, you'd see it was in those counties. Because what's happened, they're losing the young people. The young people in those counties, if you're 25, 30 years old, if you're not running the family farm, what do?
You're out of there.
You wind up going to one of those red counties or orange counties and picking up jobs. Just in the last year, just 2016 to 2017, Texas added almost 400,000 people to its population. That's a lot. About half of that was births over deaths. That's a natural rate of increase. And that's reflective of 2 things. Number one, Texas is the 3rd youngest state in the country by median age. We're 34.2 years old, median age. There are only 2 states in the union that are younger than that.
What are they?
I'll tell you in a minute. Okay.
That's
we also only have about 12.5% of our population is 65 and over. And there are only 2 states in the union that have a lower percentage. Same 2 states.
I bet I can guess those.
Give me a shot.
Florida.
Nope.
No.
Nope.
Huh.
Lower percentage of old people and higher and a younger median age. It's both of them.
Okay, I was going with
Yeah, you were going the older.
I
And
was going
most
the
people
older.
think of Florida.
Yeah,
Let-
okay.
Sake of time, I'll keep this going.
Yeah.
Alaska.
Alaska.
Yeah, all 8 people up there are younger than everybody in Texas. And Utah.
And, oh my
Utah.
goodness.
Think about it.
That is
Yeah.
interesting.
So Texas is so interesting because we're obviously the second largest state in population in the country, but we're the third youngest. We are not very old, and of course the natural growth. We have young people. That means we have more births, but also we have a lower percentage of older people, and us good guys are living longer. So we're not dying off as quick. Now, the other is immigration, and that's, of course, more important. And that's both domestic, coming from other states, and foreign. Dallas-Fort Worth added almost 150,000 people just last year. That's a whole town. That's a good-sized town added to the Metroplex in 1 year. Houston added just shy of 100,000. And incidentally, in 2016, it was over 100,000. Austin added 55, is now the 31st MSA in the country. It's now bigger than Cleveland, Ohio.
Incredible.
And most people wouldn't think that. You wouldn't think of Austin in those terms. And San Antonio, right in there, adding nearly 50,000 people, and is the number 24 MSA. It's larger than Austin, actually.
I always wonder at what point do we separate Fort Worth from Dallas so that we get those real numbers.
I can tell you that on the what's called the Dallas Plano Irving Municipal Division. The Census Bureau does separate Dallas and Fort Worth. Of that 146, nearly 100 of it, just shy of 100 of it, was in the DPI, the Dallas Plano, the Dallas side, and the rest was on the Fort Worth side. But Fort Worth has been exploding also, and the housing market in Fort Worth has been exploding the last couple of years, as we well know. So it's interesting. 8 of the top 15 largest gaining counties this last year were in Texas. And if we expanded that down to 20, there would be 2 or 3 more Texas counties added in, like Montgomery, and there was one other, not the other one. But you can see Harris Tarrant.
Maybe Fort Bend.
Yeah, Fort Bend's on the list. Yeah. It's number 14 there. And Travis, but you can see, Maricopa up in Arizona, that's Phoenix. Clark County, Nevada, that's Vegas. Riverside County, that's just outside of LA. King County, Washington, that's Seattle. So you can see, and a couple of over in Florida. And Wake County in North Carolina is the Raleigh area.
So look at all those Texas counties.
Yeah, it's been remarkable. Here's the projection. I have shown you this one before. I tend to still use it because people still want to see this. This is from the Texas Demographer's Office. Their current population, if we grow at the same rate as we did between 2000 and 2010, that's the red line, we would add nearly 30 million people. By comparison, from 1970 to 2010, in a 40-year time period, we added 14 million. From 2010 to 2050, we would add 30 million if we went to that top of that red line to close to 55 million. Right now, we're running along the purple line, pretty much, or between the red and the purple. So we may not quite hit that 30 million, but it'll probably be 25, 26 million. That's a lot of people. That's a lot of, and incidentally, that bodes well for the real estate market for the next 40 years.
Oh, it does, my gosh.
Yeah, now it won't be even, and every year won't be necessarily that great, but it'll be very, very nice. Here's the population projection out to 2050, again by county. It's the same thing. You just get the same map. The counties that have been growing, the metropolitan areas, you can see are expanding. The Metroplex is expanding. The I-35 corridor, San Antonio to Austin, actually on up to Waco, is filling in all along. For anybody who's driven up and down I-35, if you don't really move very much, but it's all filling in.
East boundary of Texas over there. The eastern boundary. Look how that's run over in East Texas.
Yeah.
Far East Texas.
A lot of that is now because so much of the large land holdings that were in timberland, inland, Temple Inland, and some of the other champions have excuse me, recently sold huge tracts of land and put it in private hands. And so now it's evolving that it can be developed and is developing faster.
It's a lot of growth.
Yes. McAllen is doing well. The Laredo area is doing well. You'll see Amarillo, Lubbock, Midland. Midland picks up very, very much. There's that urban triangle again. Austin, I'm going to go through these real quick. Here's what Austin looks like. It's going to grow, projected to grow to nearly 5.2 million people. It'll surpass San Antonio here in about the next 15 years. Dallas-Fort Worth. Can you imagine the Dallas-Fort Worth area having 16 million?
So with Austin, were we including Round Rock?
Yes.
The Williamson County?
Yes, it's the MSA.
It's the MSA.
It's the four county. In fact, I don't know if I can
sorry.
go backwards. I don't know.
Because we always include it when we're looking at rooftops.
These are all MSAs. And in fact, you can see up there the names of the counties that are included.
Okay.
And it was there on the Austin slide on there. Houston is projected to go to over 14 million people from about 6 million back in 2015.
That is just
San Antonio. San Antonio is still going to double, but it's probably the slowest growing. San Antonio's always been that good, steady, upward going.
Look at that line.
Less volatility. You can see it how straight a line.
Steady.
But you can see the slope of that line is a lot different than the blue line. You know, the blue line would indicate that it was going to even go faster.
Right. You're right.
But the longer term view is that will tend to slow down. Generally, it's because you just don't add that much. All of our cities around, and incidentally, even the micropolitan, those 10 to 50,000
and I love that
are adding population. Again, that local growth issue, it's creating a lot of pressure, most of the time the public sector, the water utilities, and water is a big issue in Texas, of course, in a lot of these areas, but electrical capacity, transportation lines. I mean, just think about Houston and Dallas and Austin right now, how difficult traffic is. Imagine the population now being 3 times larger.
That's amazing.
Well, how are we going to get around?
Well, that's always the number one question, because right now we have a hard time getting around. So that's the question.
And oh, by the way, we've got a really huge group of 0 to 18-year-olds coming along. We got to school them. You know, we're either going to build schools or prisons, one or the other.
Well, stick with schools.
But those are the challenges.
They are the challenge.
Growth is a great thing, but it's also a challenge. Let's talk about housing. I know we're going to run out of time here pretty soon. The homeownership rate, we all know that it boomed, you know, it rocked along at about 64%, a little less, for a number of years into the mid-90s. We had this socioeconomic experiment, basically, where we lessened the criteria for borrowing money, and it got carried away into the 2003, 4, 5, 6 time period. Basically, if you could fog a mirror and walk into a lender's office, you got 110% to go buy a house. It rose, it made the increase in homeownership rate go to a little over 69%. And then, of course, when it all collapsed, it all came back down again. The good news here is out there on the far right-hand side, you can see it's beginning to pick up. Now, in that 2005 to 15 time period, the millennials were not in the market. Now, at the beginning of that time period, the millennials were more or less in the 15 to 30 age group. Well, you don't expect them to be buying homes. The 20-somethings generally aren't buyers. They're renters.
Not ready.
But now the millennials are, and the millennials, if you're a millennial out there, I hate to tell you this, but you're getting older. And you're not a thing you can do about it. You're going to get older. You know, I always expected to get older. I just didn't expect it to happen so quick. But now millennials are 18, well, actually 20 to 38, 39. Well, now they're moving into the home buying, the lifestyle, the life cycle is getting there. And that's the reason for that. They're now in their 30s and approaching even mid-30s. And that's the reason that's beginning. And in fact, what you find out is that the home ownership rate for households less than 35 years old, you can see how it declined. Went from 44% to about 35%, and now is picking back up. in the next 5 to 10 years, the millennials are entering the prime. So let me tell you, if you're out there learning how to sell houses, the millennials are coming. And in fact, they're actually already here. And that's going to be a lot of your client base here. They haven't been in the housing market here heretofore. They've got to overcome a couple of hurdles that other generation groups didn't. The biggest one they're saddled with right now is student debt. Well, two things they're saddled with: student debt that is limiting their ability to borrow money, and number two, being renters, they tend to have higher tastes, so they're renting a lot in the urban center core with higher rents and aren't able to save that down payment. So saving the down payment is a limiting factor. So they want to be
downtown in this wonderful condominium high-rise
that we've been
in the
building.
Middle of everything, and then take your Uber, take your Lyft to get wherever you're going.
Precisely. Don't own a car, but it does limit if you're paying that much for rent, you don't have the ability to save and save up the down payment. And so millennials, I've got this slide. I don't have time to go through it, but the millennials' lifestyle, they've delayed getting married. So there are more unmarried couples. Now it's interesting. Talk to a lot of agents around the state. A lot of their clients now are unmarried couples. It's Jane and John, who are a couple, but they're not legally married, but they're buying a house together, and both names are going on the deed, or both names are going on the mortgage. It creates an interesting kinds of things. And some research done here by the Urban Institute, this is where this came from. The millennials are 3 times more likely not to marry than the silent generation.
Really? Well, that makes sense.
And it makes sense.
It makes a lot of sense.
It's been socially accepted, I suppose.
The silent generation being 70s, 80s.
40% of the babies born last year were to women that weren't married, or that the fathers are nowhere around.
Large number.
Large number. The average age to marry, when we came along, we're millennials, we were in our early 20s. Today, getting married, you're close to 30 for the first time, when you're married for the first time. Delayed families, not having as many kids and having them later in life. Children, increased probability of marriage. Student debt, I mentioned that. Rent in the high-cost urban center. Diversity, 39% of white tend to own, only less than 15% black. There's a big ethnic, racial breakdown. And then the high rents can't get the down payments.
And we talk about those demographics in all of our designation courses. Because obviously the more you know, the more you actually are able to give out that information, and you're giving good information, you sound more credible. But that information, I know a lot of our new people are like, well, why would I want to know that? Because you need to know that, like, most of the first-time home buyers are all millennials. So you need to be networking and doing your marketing in all different sources so that you get those potential buyers.
Well, you need to understand your customer. You need to anticipate that customer. You need to anticipate what their issues are going to be, and then have solutions ready to offer.
Perfect. Perfectly said.
I mean, that's what it all boils down to.
And it all boils down to having information.
And knowing what's going on, and anticipating it, and understanding it. People my age, we all have difficulty dealing with it. I mean, I look at what some of the millennials are doing and how they act, and I can understand why some species eat their young. But then I think back, I mean, I went to college in the 60s. I can't imagine what my parents were thinking of us as a generation.
That's exactly it. It all goes,
and we were even worse.
Exactly.
Yes. So it's a whole different thing.
It's good information used in the right direction.
Yeah, and that's the usefulness of it. Here's what sales have done around the state. 18 is going to set another record. We're anticipating by the end of the year, when the smoke clears, sales will be up about 4%. Prices, average and median, will be up somewhere around 4.5%. Now, I got to tell you, that's a slowdown. Those rates of increases there, while they look good, that's a little slower than it's been the last couple of years. We're beginning to balance out a little bit. It's not that we're going off a cliff. It's just actually we're reverting back to norm, which is an economic concept. that in the long run, you can't sustain super high levels of growth, double digits.
It has to level off.
It levels off, and what it does is it reverts back to the average or to the norm. And that's kind of, it looks like kind of what's going on.
We have 1 minute left.
Okay, I got to go quick. Here we go. Average increase in property. This is what I was talking about, the slowdown. You can see what property median home prices have done the last 4 or 5 years and how it's coming down a little bit. Here's what's happening around the state. Again, 18 is running a little bit behind 17 in terms of the percent rate of increase. The exception is San Antonio. You picked up on that a minute ago. I knew this slide was coming.
We just see it.
And you can see it in the data. Compare the green line to the red, which is the change in prices, and the orange line to the blue line, which is the change in the rate of increase in the sales. This is through the first half of 18 compared to the first half of 17. And you can see how it's just, the sales are a little bit slower. The price increases are a little bit less. They're still very good. There's absolutely nothing wrong with the numbers. It's still a strong market. Now, Fort Worth is down on the sales, but that's because I'm not sure why that is true, but nevertheless, that was the only one. And you can see at the bottom the state increase is going a little long. And here's what it looks like in terms of our affordability index. This is one of the things that we're anticipating is affecting our housing market. We're still one of the most affordable markets in the country as a state and in most of our metropolitan areas.
Good.
But it's declining. This is the most recent, but all of these numbers are lower than what they've been the last couple of years. So I think some of the buyers are getting some sticker shock. Prices have gone up so much that they're amazed when they go look at a house that their mind is telling them,
what happened?
Yeah, all of a sudden, I can tell you last night I went and bought a barbecue sandwich. It was $8. And I remember buying it at the same company a few years ago for $5.
And you're like,
and I'm sitting there, because when they asked me what the total bill, I said, wait a minute.
Wait.
And so I think there's a little bit of this element of sticker shock coming. The inventory is still down. We're running around 3.9, down a little less than 4 months. Balanced market is somewhere in that shaded area of about 5.5 to 6.5 months. We're still running below that. Here's what's happening. About 50% of the home sales in the first half of this year were in the 100 to 250. Now, this is statewide. Okay, so in some of the metropolitan areas, it's a little bit higher. It bounces down. But look at the inventory level at 2.4 months and 2.3 months and 2.9 months. It's just one of the things that's happening. The boomers, my age group, are not moving. It used to be a standard. We figured 5 to 7 years was the turnover rate for a house. That's running now about 9 to 12 years. So people are staying in place. Also, we've refinanced now to 3.5% and 4% mortgages, so we're not anxious to give those
very
up.
affordable.
And even if I wanted to move, I can't go find the house I want to move into. So the dominoes don't tip over because you just can't find it. Here's what's happened in July: home sales being up in almost all of our markets. That's what the green indicates, up 1 to 10%. There's one red market down there in McAllen. Amarillo was flat, but most of the markets were up. Home prices in general are up. Beaumont's still suffering a little slower, but that's the Harvey effect. You can see the home prices are going. Home construction is still going, but we're still not building enough houses. We're still running short, even at 124,000 units if we build them, which is, incidentally, we call that recovery because we've exceeded our long-term average. But that's that horizontal red line. But it still isn't enough per 1,000 households that get created, new households. We generally built 820 units. We're not building anywhere close to that, so it's a cumulative shortage effect. We just don't build enough. We did build a lot of apartments, but even that is now declining. The rate, people are getting nervous about the apartment market being over.
That's a good thing that they slowed down a little.
But that's the millennials coming through 5, 6, 7 years ago when they were in their late 20s, occupying those units, even into their early 30s. But now they're beginning to move out. They're looking to move out in there. This is our residential construction index. The leading index is the red line. The good news here is out on the far right. It's pointing up. You can see the blue line, which is total housing permits, is following suit. The coincident index is also up. Here's, for those of you here, you'll have access to this. These are some of the websites that you can go to get the data. Here is the market dashboard. This is out on the TAR. Look at the source down at the bottom. This is called the Market Viewer. The Real Estate Center is providing this information. We've gone into contract, a research contract with TAR to provide this. And what you'll see at the top there is the most important. You can go out to their market dashboard and you can get this same information by zip code, by neighborhood, by school district, by city, by county. We have now the ability to break it down by geographical areas. You're not limited to just that large MSA level.
County.
This is for the state, and this is for the second quarter. Those are some of the same numbers.
Helpful.
Here, the market infographics are also out there. So I've got 3 or 4 here. Austin, Dallas, Fort Worth. These give you this is a snapshot. It's a one-page view of what's happened in the market this month. And here's Houston and San Antonio. And then going forward, I'm going to leave you with this. We're going to be living now in a world of rising interest rates. We don't see that not happening. Mm-hmm. We're going to go back. I can tell you that somewhere, probably the 5% is going to have a psychological, 6% and 8% are going to have psychological impacts. We're going to live in a world with increasing inflation. We haven't had inflation for the last 10 years to speak of.
But it's going to take a while for those interest rates to get up there.
Yeah, we hope.
We hope.
We hope. There's no guarantee on that. Monetary policy is going to rising debt. I mentioned that. There are a lot of economists, I'm telling you, that are looking for what's called the Great Debt Reset. We don't know what that'll be. Is maybe printing a lot of money, because a lot of the debt that's being created is being created by federal, state, and local borrowers, and they don't have the ability to pay for it. And that doesn't include what we call the unfunded debt. And Houston, for example, and Dallas, and Austin, and San Antonio all have it. They have unfunded liabilities for pension funds for all their public employees that they cannot afford to pay. They do not have the money for it, period. They don't have it.
Really
and those are bigger numbers than the reported debt numbers, or equally as big. And those don't even get counted in the statistics.
Not good, Dr. Gaines.
We're going to have new jobs in the next 20, 30 years that haven't even been created yet. And we have got the challenge of creating qualified labor. In other words, training and educating our young people to be prepared for those kind of jobs in the future. You're not going to need to know how to be a roughneck to go out on the oil well rig and you know, all the pictures of the guys and their jeans. The guy who's going to be doing that is going to be the guy who can program the machine, the robot that goes and does that.
The programmer.
The programmer.
The robot.
Yes, and that's a different kind of job than the manual labor who's out there running those chains. Energy industry toward renewables. We talked about that in the wind and the solar, and then we're expecting some major asset price moves. Real estate, stocks, bonds. We're at the record run on the stock market in terms of a bull market going up. Real estate has been going up rapidly. When the interest rates change, the bond market, of course, reacts in the opposite direction. And these things are going to happen. And I did finally quit.
You are so wonderfully smart and helpful.
I don't know about that, but
and impressed as can be, as always, with the information that you've given us. For any of you that were looking at us and the screen, as you could tell, I apologize. We were both looking at the screen, at the charts and the graphs. But I know we all found this extremely beneficial, extremely helpful. The Real Estate Center at A&M University is for us, the real estate licensee. Use it. Use the incredible information they have. I know I do. And at Champion School of Real Estate, our teachers read and keep up to date regularly. So next week on September the 11th, you'll have Logan Brown and Pat Combs, both incredible speakers, have amazing careers in baseball, but also incredible careers in life coaching and just good information that help you with your sales. And again, it's only $35 for an hour and a half for these two outstanding people. And then in October we have Ronnie Matthews and we have Amy Bernstein, top producers. A shout out to our wonderful president who's moved over to the Austin area, and I know that today she's over at the West Campus in Houston. So I just wanted to say hello, Kim. Thank you for moving over to the Austin region, and to all of our managers, all of our career counselors that take good care of our customers. So thanks so much for your business, and we will see you next time. Bye-bye.